Hello traders, and welcome to the StockGoodies Chart School. Chaikin money flow, or CMF, is an oscillator that measures buying and selling pressure over a set period of time. It was developed by Mark Chaikin, who also developed the accumulation distribution line and the Chaikin oscillator. CMF forms the basis for the accumulation distribution line. CMF measures the amount of money flow volume over a specific look-back period and is usually set at a period of 20 or 21 days. So let's go ahead and load up the CMF on this stock chart of Yahoo here at stockcharts.com. Scroll down to the bottom, and in indicators you will select Chaikin money flow CMF. The standard parameter is a look back period of 20 days, and I recommend leaving it at that specific time setting. Click update, and this is the CMF. Okay, important things to look for on the Chaikin money flow. The zero line is very important. Buying pressure is evident when it's above zero. Selling pressure is evident when it's below zero. Okay, it ranges from a -1 to a +1, but that would be nearly impossible to do. In order to reach a +1, it would have to close at the high of the day for 20 consecutive days in a row, and it would have to close at the low of the day for 20 consecutive days in a row in order to have a -1 reading. The average reading is generally between -0.5 and +0.5. Those are pretty extreme readings on this indicator. Because CMF is such a volatile indicator, you can tell by the jagged, sharp up and vertical ups and vertical downs, but very jagged lines. It's subject to what is called whipsaw. Now, one way to avoid that is to have a safety buffer above and below the zero line set at +0.05 and -0.05. So any little crossover that doesn't actually work, a little whipsaw there, there's two right there, really don't count. Okay, so let's take a look at the beginning here. CMF was very negative here, crossed up through the zero line here, and then cleared the +0.05 buffer zone right here, and the stock did take off. Okay, it remained very above the zero line right here with only two short periods of whipsaw that really didn't count, okay, because it crossed right back up through the zero line. This right here is where it crossed down through the zero line and then did a little whipsaw, but finally crossed back through the -0.05 line. That's where bears took over control and the stock price fell. Okay, in this zone it remained negative except for two little whipsaws above the zero line, which immediately corrected back to the negative side. Right here is where it crossed up through the zero line, and then right there is where it crossed up through the +0.05 buffer, and the stock did go up. Okay, then it had a little period of whipsaw that just tagged the -0.05 line, and then crossed back up through zero, and then back up through the 0.05 on the plus side buffer. And that's where the stock really took off. Okay, there's two reasons for that. The first one is this is a bull flag chart pattern, and it broke above the descending trend line at the highs. Okay, and that's bullish whenever it breaks above that trend line. Okay, it was even more bullish when it broke above this area of resistance right here. Okay, and CMF took off in a very big way. Now let's take a look at the CMF in action on a stock chart for Yahoo. Okay, it's a very good stock for doing technical analysis on. Let's talk about the crossovers of the zero line first. Okay, right here was a crossover of the zero line. The stock went up. Okay, here was another crossover from below the zero line to above the zero line. The stock goes up. Pretty good, breaks above resistance. Okay, this time it dipped below the zero line, quite close to the safety buffer zone there at the minus 0.05 line, and it crossed back up through the zero line right there. The stock goes up. Okay, same thing here. It dips below zero, well within the minus 0.05 buffer zone, crosses back up through zero, and the stock goes up. This time it dipped well below the zero line, probably just below the minus 0.05 buffer line, but then crossed back up through it, and the stock went up. Now let's talk about peaks and valleys on the CMF. Okay, this is what I call a peak. It has a very sharp point. This works best when they are very vertically up, a very pointy point, and then very sharply down. But it also works on the rounded tops too. Okay, right here is a top. And then the CMF starts down. Stock price goes down. Here is another peak just before a fall in the CMF. Okay, the high right there, CMF down, stock goes down. Didn't work this time very well because it was not a very sharp peak, so the stock moved basically sideways. Now here, this is a great one because it is a very pointy peak. Okay, and let me get it set right, and right after it forms, as soon as CMF starts turning down, the stock price turns down. Okay, you're kind of getting the idea of what I'm talking about. Okay, it happened here. Not very well. This one was a little bit sharper of a peak, and it worked really well. Okay, it also worked here. And of course, the opposite is true. When you see CMF fall really hard and make a very sharp valley, could be a good time to buy as soon as the CMF starts to uptick. In this case, it was forming a bullish W-shaped double bottom chart pattern and had just broken above the neckline resistance right here, and the stock took off. So this is a pretty tricky buy, and I only combine it with 2 or 3 other indicators to confirm. But when you see a reading of minus 0.4 on the CMF, that is a very low reading for this indicator, and stochastic should have been below 20 and turning up at this point, and the RSI should have been at very oversold conditions also. Now let's talk about kisses off of the zero line. Okay, here's a good example right here. CMF is high. It comes down, it almost touches the zero line, and then bounces. Okay, it doesn't even really touch it, but it's still called a kiss. The stock goes up. Okay, it also happened a couple of other times back in this zone. Okay, let's try to grab this one right here. CMF was up, it drops towards zero, but then upticks. Same thing happens here. It's up here, it comes down close to zero, and then starts to uptick again. Same thing happens here. Okay, stock goes up. Now this was a true kiss because it came extremely close to the zero line. Now let's talk about a bearish kiss. This is a bearish kiss right here, where CMF is down, it goes up, almost touches the zero line, but is rejected, and the stock starts a pretty serious downtrend. Chartists looking for quicker money flow shifts can also look for bullish and bearish divergences, but be careful. Selling pressure still has the edge in negative territory even when there is a bullish divergence. This bullish divergence simply shows less selling pressure. It takes a move into positive territory above the zero line to indicate actual buying pressure. As a money flow oscillator, CMF can be used in conjunction with pure price oscillators like the MACD or the RSI. And as with most indicators, CMF should not be used as a standalone indicator.